My name is David Jaffe. Welcome to the Wealth and Health Podcast, where you'll learn valuable skills and positive habits that will improve your life. This podcast originally aired as a video on my YouTube channel at youtube.com/beststockstrategy. The Wealth and Health Podcast is brought to you by beststockstrategy.com. 6 cheap stocks to buy ASAP, May's best picks by Dividend Talks. I really like this channel. He provides his analysis. He also doesn't delve into penny stocks or things of that nature. And even though I'm not a huge fan of fundamental analysis, and he also has a tendency to use discounted cash flow, which in my experience has never been used as a primary valuation tool, I still think that watching his videos provides really good ideas and really good insight. So without further ado, let's see what he has to say.
We've just come off the back of a fairly strong week for the market, but if we do zoom out to the last month, we can see still the market hasn't reversed. We are looking at a large sea of red, a month in which we got many recession calls, JP Morgan 60% chance, Goldman Sachs 45%, and if we do zoom out even further to year-to-date 2025, we are still waiting for the market to turn green. Many companies still down double digits, but we do have to give a shout out to Berkshire Hathaway. Whilst the market is still looking in a poor form in the year, they're up 19%. Not only that, but they're up 35% on the year. And in fact, when we do zoom out, they are now trading at an all-time high around the $542 mark, one in which Quant, Wall Street and Seeker Alpha do believe this is a company just to continue to buy. In fact, it wouldn't be a bad strategy to just dollar cost average into. And we do also notice investor sentiment is getting a lot better. Whilst we were in extreme fear at the beginning of April in the low single digits, we're moving out, and perhaps in the upcoming week, we will move into neutral. Bear in mind, earnings season is still in full swing. We have many companies that are reporting next week. A few just to keep your eyes out for. We have Palantir reporting after the market close alongside Hims and Hers, as well as Realty Income for those REIT lovers. And of course, we have AMD Super Microcomputers after the bell on Tuesday. And as you can already see, there are still many other quality companies to report. We also want to flag the S&P up.
I think this is a great amount of information. We're just a minute and a half into this video and he's already providing value. Also, I definitely agree with him about Berkshire Hathaway. I'm actually recording this on Saturday and Berkshire reported earlier in the day. Warren Buffett's going to end up stepping down, so I wonder how that's going to affect their stock price on Monday. But overall, Berkshire is amazing. It's slow and steady. It's not that volatile, and it's a great way of investing in the market while also reducing some of the risk that comes along with investing in those higher beta stocks.
The moment is trading at a valuation around 28 to 29, one you could argue is fairly high. And if we were to take a look at some of the averages it has been trading at, we are sitting around the 15 to the 16 mark for a long time. And what that ultimately means is when we look at the S&P 500 on a forward valuation basis, there are still many companies that perhaps we wouldn't touch even after a fairly poor start to 2025, even though we have seen a bit of a recovery at least over the last few weeks. And in fact, we are now sitting on the longest winning streak for the market since 2004, something maybe you couldn't see at the heightened peak tensions of the tariffs.
Yeah, the market's been up 9 straight days, and there were a few days in there where the market was down significantly. I think last Monday, I'm not sure exactly when I'm going to post this, so it was the Monday that started the last week of April 2025. At one point, the S&P 500 was down over 100 points, and then it actually rebounded and closed higher. So yeah, 9 straight days, a couple of those with really strong price action, and the market has basically recovered a lot of the losses that it suffered previously.
Point of the market just before that tariff drop. And also worth pointing out, we do have the upcoming Fed meeting next week where it is anticipated rates will be held, although the market overall, as well as Donald Trump, is wanting to see cuts as soon as possible. Having said all of that, we want to cover 6 quality stocks that we believe are good potential buys this month. We're actually going to get into quite...
So Google was interesting where it reported earnings, and then at one point after hours, I think it was trading at about 173, 174. But then the trading day after it reported, it only traded up to about 163 or 164, so it was barely up after it reported. I'm not sure why Google is trading at such a depressed valuation. I love their Gemini AI product. I use it all the time. I think that it's better than ChatGPT. I think it's better than Grok. I use their AI Studio, so currently I'm using version 2.5 Pro, and I have no complaints with it. Additionally, Google's advertising revenue is consistently growing, and YouTube as a product by itself is probably worth about $800 billion. So I definitely believe that long-term, Google is a screaming buy at these levels.
Some detail with each one, starting off with Alphabet.
And then before we go to the second stock, I'll set up a trade that I would make in Google using options. You can either buy the shares or you can use options. I prefer using options because it's more capital efficient.
Year to date, it has still plummeted double digits, -14%. This is after their earnings, which we will briefly touch upon, reported last week. And over the last 10 years, nonetheless, they have outperformed the S&P, up around 500%, still trading in the lower end of the 52-week range, with still a double buy from both Seeky Alpha and Wall Street. And this is one that does pay a dividend on the lower end at 0.5%, but a very attractive forward valuation at 17.2. Now, as highlighted, they did report their earnings not that long ago, where not only did we see growth of their top line at 12% year on year, but their fastest income stream, the Google Cloud, was up 28% year on year, fast surpassing that of Amazon, even though they are a market leader. Gross profit up 2 percentage points.
All right, I'm going to fast forward because he has 6 stocks here, and I also want to show some option plays that I would personally do. So I don't want to go through this whole video because then it'll be an hour long.
And then for those that do want to see it on a numerical basis, very large increases over the period. Very important as well, not companies that just pay dividends, but those that return excess cash through share buybacks.
Here's where he looks at discounted cash flow, which is not something that I recommend as a primary valuation tool, but I think many people would agree that Google is undervalued.
Just yet, we'd say 158, but you are getting pretty much between 25 to 30%. Wall Street themselves see this at 205 over the next year, indicating 26% upside. As always, give us your thoughts as we go along, your own thoughts, and whether you see them as a buy, hold, or sell. But if you see only 8% growth of future free cash flow for the company, you are pretty much getting 5% margin of safety. This is just to highlight that this company, we do believe, is incredibly undervalued.
Here's the trade that I would make. I would go out about 27 days. Then I would sell the 155. That'll provide you with additional margin of safety. And then I would buy the 170, and then I would sell the 180. This would then allow me to collect a credit of $65, and simultaneously it'll provide me with $1,000 of upside. And in the worst case scenario, it would also allow me to purchase Google shares at 155. So I would collect a credit when putting this trade on, and my maximum profit would be if Google was trading over $180 at the end of May. And in that scenario, I would profit $1,000 from the call debit spread, plus the $65 that I would make when putting this trade on. Let's check out what his second stock is.
From Pepsi, who did lower their guidance. Now they're up 16% over the last year, and year to date up 15%. Over the last 10 years, up 75%.
I don't think I've ever owned Coca-Cola. I know that Warren Buffett has owned it for 30 to 40 years. I kind of feel uncomfortable owning something like Coca-Cola, considering that a lot of its products are basically metabolic poison for people. But that being said, though, Coca-Cola is probably one of the most valuable brands, and I definitely have respect for the company. I just don't feel comfortable owning something like that. Let's see what else he says as we skip through the video.
Bear in mind, this on that value percent, pretty much in line with their own 5-year, a bit lower at 927 million. Did in fact increase the dividend at 5.2%. So when we take a look at this company in terms of their safety, a negative 31, the last 105 years without a reductive growth, the ROI are 3 over the next year. So it is understandable why this company is. And for those that did want to see a margin of safety, At 10%, a buy at $63. At 15, around percent. As we said,
regarding Coca-Cola, I haven't looked at it. So let's look at it real quick in the E-Trade app, and then I'll set up a sample trade. Coca-Cola, here we can go out to May 30th. Then I would be comfortable owning it. So this is another issue. Because Coca-Cola is so stable, if you want to sell a put strike at $65, then you're really not going to collect any premium. You're going to have to be a lot more aggressive, probably selling something like the $69 put. And then if you wanted to play the upside potential, you can buy the 74, then you can sell the 78, and you can finance it by selling the 69s. This you can actually do 111 as opposed to a 112, and this will allow you, like I mentioned earlier, to purchase Coca-Cola at $69, and it'll also give you $400 of upside. Your maximum profit here would be if Coca-Cola was trading above $78, in which case you would profit $400 plus the $8 credit that you would receive from putting on this trade. Let's check out what his third stock is.
1/5 of their market cap just wiped off.
Oh, I 100% agree in UNH. I think that it's been dramatically oversold. I remember when UNH was trading over $600 and now it's trading at about $400. So let's check out a potential trade that I would make for UNH. We'll go out to May 30th. I would love to take ownership of these shares at about $365. So I would sell that. Then I would definitely play the upside because I think that UNH is way too oversold. So I can buy the 415. I can then sell the 435. And then I can sell 2 of the 365s. And that should give me a credit. Yep, it gives me a credit of $155. So in this situation, I would love to take ownership of UNH at 365. If UNH is trading over 435 upon closing on May 30th, I would then realize the $2,000 profit plus the $155 of credit that I would keep when putting this trade on. I'm curious to see what his analysis is regarding a fair market value on UNH.
Yet over the last 10 years, they still have massive discount to the set. And when we look to the earnings per share and also above it from 99 to 90, it still highlights the rate 9. Free cash flow also, maybe we will see looking above the latest quarter, $6.1 to $558, which will signal after this large drop a lot of margin of safety. And if we keep on going, you're getting near 30% at $391.
Yeah, that makes sense. I definitely think that UNH is way oversold, especially for an insurance company that has predictable revenue streams. I think that UNH right now is probably one of the top buys along with Google in the entire stock market.
Whilst 25% is 419, we would say it is leaning more towards a 30% MOS, and Wall Street themselves very, very bullish, $565 even after the drop, even after their earnings. They anticipate 42% upside over the next year. But as always, give us your thoughts whether or not you have been buying on the dip, or in fact you do believe that this is a falling knife that will only continue to go lower and lower. We then move on to the Toll Brothers, which is down 14%.
Toll Brothers, for a builder, I think they primarily focus on luxury homes. Now that's interesting because it's a play on declining interest rates and also a recovering economy. I'm not necessarily a fan of this trade. I think that UNH and Google represent safer investments, but let's see what he says and then we'll set up a trade in the E-Trade app.
Last year to date down 17%, but over the last 10 years they have outperformed the S&P up 185% on quite a significant pullback towards their 52-week low, with their 50 might be one of the largest today at around 30% up to $107. Wall Street themselves 141 price target, 34% upside. Give us your thoughts.
Interesting. So let me check out Toll Brothers and see the trade that I would set up. Yeah, it's definitely gotten crushed. Let's see when their earnings are. Yeah, their earnings are coming up on May 20th. So if I was going to go to something like June 6th, then I would go pretty far out because due to the earnings, I would still be able to receive a decent amount of premium. I would then sell the 90. That would give me around $1.30 of credit. If I was bullish on this security, Then I can buy the 110 and sell the 115, $8 for $500 of potential upside if Toll Brothers was trading above $115 upon market closing on June 6th, or in the alternative, I would be able to purchase 100 shares of Toll Brothers at $90 a share, which is an amazing value. So this is the trade that I would put on. I'm not putting it on for a credit. Instead, I would put it on for a minor debit. If I wanted to put it on for a credit, then I could either increase this to 111, which would then give me a credit of about $27. Or alternatively, I can increase this from 90 to 91, and then that would give me a further credit. Let's check out what his fifth recommendation is.
Is this under the radar company? You absolutely do get an F, in fact, on the valuation, as the sector does sit a lot lower, and you are paying, in fact, a...
So you have American Express, AXP. This is another stock that Warren Buffett loves. It has really strong brand equity. Let's see what his valuation metrics are.
Another one with a nice margin of safety. As we keep going, you're getting bang on 15%, and Wall Street...
Let me check it out in the E-Trade app. AXP, it was up a lot last Friday. I would sell either the May 30th or the June 6th, and I could sell the 250 and pick up over $2 a credit. Then I can buy the 285 and then sell the 295 and then sell two of those, buy one of those, and then that'll give me a credit of $123. This would give me a $1,000 upside if American Express was trading over $295 on June 6th at the market closing, plus around $123 of credit that I would receive for putting this trade on. I think this is okay. I like UNH and Google better, and let's check out what his last recommendation is.
Wall Street themselves envision 14% quarter, revenue up 16% year on year. It was severe undervalued.
So Meta has a situation with the FTC where there's a possibility that it's going to get broken up. I think that the likelihood that it'll get broken up by the FTC is very low, maybe about 20 or 30%. But the market does hate uncertainty, and that's one of the primary reasons why in early April 2025, I think Meta was trading at about $480. But at one time, Meta was trading at around $750. So it definitely sold off tremendously relative to where it was trading just a few months earlier. Let's see what his valuation is. The other issue that I have with Meta is that over the past week, it's been very, very strong. So whereas previously you could have bought it at $500, now I think it's trading close to $600 a share. So it's bounced up tremendously off its lows.
Wall Street themselves see $720 upside of 21%.
The issue that I have is I don't think Meta is going to reach that $700 level until there's a resolution of the FTC case against it. Let's set up a trade in E-Trade when looking at Meta. Here you have Meta. It was up another $25 on Friday. It's trading close to $600. Previously, I think it hit a low of about 480. Yep, it did in early April of 2025. Regarding trades, I would go out to June 6th, and then I would sell the 540. This would give me a lot of credit. It would give me about $6.75. Then I could purchase the 630, and then I can sell the 45s. I can do this on a 1-1-1 basis as opposed to having to sell two of the short puts to finance the call debit spreads. And then my maximum profit here would be $1,500 if Meta was trading over 645 upon closing on June 6, 2025, plus the $217 of credit that I would receive for putting this trade on. This is a pretty good risk reward if you want to think long term, because in the worst case scenario, you can buy 100 shares of Meta at $540. So I like this trade. However, if I had to rank the trades, I would probably rank UNH first and then Google a close second. Then I would put Meta as third, and I wouldn't make any of the other trades. So my top pick out of all these trades would be UNH, and that basically wraps up the video. if you watched this far, then I would definitely appreciate you dropping a like on this video and leave a comment. You can also click on the video that's popping up on your screen right now because YouTube believes that you would enjoy it the most. Visit beststockstrategy.com and submit your email address to receive valuable free training. Please give this podcast a positive rating and review. If you have any questions, visit beststockstrategy.com and send me a message.